If we get below that, psychologically, that's going to screw with a lot of investors' minds. But if we take that out, folks, that's going to break a lot of hearts in the crypto sphere.
In today's video, Chief Market Strategist of InTheMoneyStocks.com Gareth Soloway tells us all about his latest analysis of the charts as well as his predictions and price targets for Bitcoin. Soloway shares his opinion regarding high inflation rates, the stock market, the crypto market, and the Fed.
Blood in the streets, blood in the cryptoverse. Here is where we are right now. It's 9 a.m. and you know what time it is. It's the game plan time. And I'm here to walk you through everything you need to know about the markets. We're going to cover commodities, crypto, and stocks. Let's get it rocking and rolling. We have Bitcoin, right? Bitcoin, a monstrous tumble. Now, the key with Bitcoin, look at this flush. I've been telling everyone to watch out for this trend line, right? So if we zoom out on this chart, and again, I want to just say this, folks. There are a lot of influencers out there, tons of them, and they're always saying, hey, it's going to all-time highs, it's going to do this, don't worry, it's a new bull market. These people, they've been trading for 3, 4, 5 years, maybe a couple cycles in crypto. Folks, I've been trading now for 24 years. I've been day trading, literally making multiple trades every single day, in and out, swing trading. And even I still make mistakes. And the point is that to learn how to read this stuff, it doesn't happen in a few years trading a few buys on Bitcoin or in the crypto world. It doesn't. You need to be careful who you follow. I was warning everyone at 31,000. I said, guys, I don't think it's getting through here. I think it's pulling back. And no one, again, very few, I should say, believe me. Here you have it right here. This is the charts. The charts give us probabilities. I want to be the casino, not the gambler. Being the casino, I'm going to be wrong sometimes, but overall, I'll win more than I don't. And that's the key. All right, so here's your 31,000 level. We know here it hit multiple times. This was the telltale sign. This reversal, you closed above, you got a reversal candle. Reversal candles, technically speaking, are bearish signals. When you have a green and then an equal size red reversing, especially where it's the only candle that really closes above that line, you have to say that's a warning sign. We then saw markets kind of go to sleep. Anytime the market goes to sleep and you have bearish signals, be very careful. And the reason I say that is because the volume starts drying up, which means once you get a break of 28,000, it's almost like a trap door opening up and you collapse through it because there's no buyers. There's no buyers here, right? We know that the volume on Bitcoin over the last couple months has gotten anemic. So once you have stops here, tons of people, tons of players putting stops here, when a stop is triggered, it sells automatically. And when there's no buyers, it creates a trap door and you fly through it to the downside. Now again, this is now a break of the 28,000 upsloping trend line. I've been telling you in these game plans for multiple weeks now that this is what we call an upsloping trend. Trend being the key word, upsloping trend line. What this now means is that the upsloping trend has been broken. All right, now you haven't made a lower low yet. That's this point. That'll be the next nail in the coffin here in the near term. Now, if it doesn't make a lower low, okay, that could be a slight positive, but that's the next point we're watching. So I want to add that into my chart right now. For those of you that are home gamers, you guys can see again right here, look at how close we got to it too. The flush almost took us to this level. The reason why this level is so important on Bitcoin is because this is where BlackRock came out and said, hey guys, we're filing for a spot Bitcoin ETF. If we get below that, psychologically, that's going to screw with a lot of investors' minds, right? You still have a likely scenario where a Bitcoin ETF spot is going to be approved. In fact, one was just approved in Europe recently. But if we take that out, folks, that's going to break a lot of hearts in the crypto sphere. After that level, you go down here. So let's just say we do take out 25,000, which is this point right here. If we come down and we take this next level out, this is the next level of support. It's right around 20,000. The reason why this 20,000 level, it's an even number, that's inconsequential, to be honest. It's a slight, maybe a 5% importance. The real reason why this is important is this level is where Silicon Valley Bank failed. Okay, so the bank started to fail, Bitcoin ripped. we actually touched 31,000. We then faded. BlackRock and other firms like Fidelity announced spot ETFs. We ripped up again. So this is your upsloping trend line. Now that's been broken. You now are focused on 25K. Can 25K hold? If not, you're now looking at 20,000. If that doesn't hold, you're coming back here. Now, this is the kicker, guys. The reason why, again, it's my only thesis for why Bitcoin gets back to 15,700 and maybe goes to 12 to 13, which would be your next support below that, or even 10 to 9, which to me would be max pain. You'd flush out the maximum amount of bears. Again, do I think it's going to break that? I don't know. I don't know if we're going to take out the lows. But the only reason that is going to happen, because right now, regulatory-wise, Bitcoin's in the clear. We know that. It's not on the radar of the SEC. More and more people are focused in on it, the spot ETFs. It's a lot of good news with one bad thing. And that bad thing is what you're looking at right here. This is the S&P 500. And the S&P 500, all right, has just had a monumental rally from the, basically, here's the 2020 lows. But this low right here, we were at around 3,500 on the S&P 500. We rallied to 4,600. Everyone was saying, hey, it's going to take out all-time highs right here. All right, I said no. I've seen this pattern before. If you go back to 2009, this pattern was here. If you go back to 1999, 2000, this same pattern, all right, this same pattern is here. All right, and by the way, if you look at the psychology of a market chart, which I showed earlier this week in my game plan, this is the pattern that shows up. This is euphoria. You then have the initial sell-off, and then as it rises, people get complacent. They think, oh, it's buy the dip. I'm going to buy back in. Everything's going to be okay. We'll go to new all-time highs. I heard all of that, and I'm sure you did too. Smarten up, because that type of stuff should give you an indication. So in any case, now we're starting to roll over. S&P futures are down again. All right, we're seeing it down again. Now, the key is this, and going back to my Bitcoin thesis, this is my only thesis for why Bitcoin gets back to 15,700 or lower. It's if this chart rolls down to this low here or goes below, Bitcoin's going a lot lower. Okay, so keep that in mind. That's your kicker. So let's just say for some crazy reason the economy gets into a bad recession. We even go test the 2020 lows down here. Okay, if that happens, I would say there's no possible way Bitcoin's not below 15,700, maybe 12, 13, maybe even 10 to 9. Now, long term, I'm a huge bull on Bitcoin, folks. To me, it's a no-brainer. If you have a long-term horizon, 5, 10 years out, it's a no-brainer. But if you want to potentially see lows, there's the chance, and it's going to be stock market related or risk asset related.